Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks trade lower as investors gear up for a week of political risks and inflation data. Japan's top FX official says authorities are ready to support the yen 24 hours a day. Israeli Prime Minister Benjamin Netanyahu says the current phase of fighting in Gaza will end, quote, very soon, freeing up troops to send to the northern border to confront Hezbollah. Plus, with 10 days to go until the UK general election, Business Secretary Kemi Badenoch and Shadow Business Secretary Jonathan Reynolds go head-to-head in our live debates. Let's check in on these markets then. European stocks managed to eke out gains by the end of last week. US futures, though, ending a little lower. Currently, European futures pointing to losses of about 0.1%. Yes, it's a big week in terms of the inflation data that comes out of countries including Italy and Spain, France, but also, of course, when it comes to the Fed on Friday, the Personal Consumption Expenditures Index, the PCE index, which we know is a key focus for them as they gauge the inflation moderation that is starting to appear in the US economy. FTSE 100 futures here looking lower by around 0.4%, looking to lose around 29 points. Commodities under pressure, iron ore and oil taking a bit of a hit in the session so far. S&P futures pointing to losses of about 0.1%. Nasdaq futures also lower just by 10 points so far in the session. Let's flip the board and look cross asset. We, of course, have an eye on the Japanese yen. We'll unpack that story for you in the next minute or so. But the US 10-year to start with, 424, as we weigh up, of course, the inflationary impulse coming through from the US economy and any further commentary from Fed officials. 106 on the single currency. To what extent will that be volatile as we continue to monitor the French election risks with the first vote coming through this weekend? 106 on the single currency, unchanged so far in the session. $85 a barrel on Brent's a little modestly, very modestly softer as we look at the inventory cycle and potentially a bit of risk off in terms of the demand coming through for oil. Iron ore, 102 per tonne, currently down full 2% on fresh concerns about the Chinese property sector and also a build-out of inventories in the world's second largest economy. Let's cross over now to Singapore. Avril Hong is standing by for a check on the Asian markets. Avril, a focus on the yen and the read across then to Japanese equities.
Absolutely. I mean, we're seeing how some of these auto stocks are helping to boost the benchmarks. But let's also talk through what we're seeing in the rest of the Asia Pacific, where the risk of mood is really strong and the selling is being seen on the infotech sector. Among the biggest drags are those chip stocks. TAIEX is underperforming, and this is tracking NVIDIA's performance late last week, but also as investors turn more cautious in the week where we're going to get those US PCE numbers on the mainland, declines as well. CSI 300 off by about 0.2%, but the Shanghai Com is another one that we've been watching earlier today, hitting the lowest level since February. Sentiment is weak. Investors are demanding more stimulus action. That's what we're seeing in the Greater China region. Flip the board because, as I mentioned earlier, it's about how Japanese equities, the benchmarks today seem pretty buoyant, given what we're seeing on auto stocks, and a lot of it has to do with the weakness in the yen. And for dollar yen, think about how we got the stronger than expected US PMIs last week. We're watching out for the PCE this week. But on the other side of the equation, it's also about how the BOJ officials have been pretty reluctant to give details about the reduction of bond purchases. So those yield differentials likely to remain wide. And that's why, despite the BOJ summary of opinions from its June meeting suggesting that we might see that hike in July, despite the verbal intervention from the top currency chief and the finance minister, that's doing very little to help the yen to recover. Let's flip the board again because I think we are also seeing how traders are pretty complacent when it comes to pricing in the intervention risk in terms of the risk reversals. The thinking behind this seems to be, hey, Japanese authorities spent a lot of money to intervene in the market earlier this year, and there was limited effect. So this time around, they might wait and see, maybe see dollar yen a bit higher before stepping in so that any move is more effective. Tom?
OK, Avril Hong checking in on the Asian markets for us, joining us out of Singapore. Avril, thank you very much indeed. Let's stay on that theme then, the consequences of further weakness in the Japanese yen. Let's bring in Mark Cranfield from Bloomberg's MLive team in Singapore. Mark, talk to us about the intervention calls again, or at least the rhetoric coming through from Japanese officials. What is your take in terms of the effectiveness of any further intervention for the Japanese currency? Can it finally put a floor under the yen?
It's going to be very difficult without the Bank of Japan doing something on monetary policy. So we heard both from Mr. Kanda, Mr. Suzuki again today, repeating much of the same language they've been using over the past few weeks, telling people they're on standby any time of day to support the yen, that nothing is excluded, they could help by intervention or any other measure that they see fit. But if you think of, from a trader's perspective, if you think of the past 2 months, we're almost back to 160 on dollar yen, which is where it was just after the Bank of Japan April meeting. So in the past 2 months, we've had 2 Bank of Japan meetings and we've had a record amount of yen buying by the Japanese authorities, and yet there's very little to show for it. The key factor from an investor's point of view is that the Bank of Japan had 2 opportunities to show that they meant business in terms of doing something on policy that would strengthen the Japanese yen, and both times they kicked the can down the road. Most significantly, they did it again at this June meeting, suggesting that July would be the time when they discuss lowering bond purchases, which would be something that would help the Japanese yen. Traders wanted it now. They were expecting something immediate. They're also expecting some details on when the next Japanese interest rate hike would come. They got neither. So now you've also, having seen that the previous intervention was largely ineffective, traders really are thinking to themselves, well, yes, we probably do expect the Japanese authorities to step into the market again. But how much is it going to do unless the United States starts lowering interest rates? It's really a very one-sided equation, and the Japanese side of it doesn't look particularly strong. So really, unless the Federal Reserve suddenly turns very, very dovish, it's going to be very difficult to see how the yen appreciates substantially.
Okay, yeah, the relative impotence of officials in Japan at the BOJ, the finance ministry, of course, in light of that higher for longer cool rhetoric that we're hearing from Fed officials. We'll see if the inflation data out later this week changes that equation, of course. In terms of the rotation that may be happening, that will be happening potentially, the end of quarter rotation, in an environment, Mark, for equities we're talking, of course, in an environment where you have all these uncertainties around central bank action and around the inflation picture, how much of a risk is that potentially for these equity markets?
We could see some. In fact, we probably are beginning to see the early stages of it. And it's not unusual as you come towards the middle of the year. A lot of portfolio managers, they assess to see who's been the big winners, who's been the big laggards during the first half of the year. Is there room for us to shift some money out of those profitable trades into some of the people that may catch up? If you look at the United States, there are plenty of industrial old type companies. They're still making very good profits. It's just that they're not in the AI space. They're not in the tech space. They haven't enjoyed the kind of run that some of those companies have. Look at Nvidia. It's down 6% or so in the past 2 trading sessions. There's clear signs that some people are cashing in a little bit, and maybe that money will find its way into other sectors. We'll see it play out this week and probably into next week as well. But then again, when you look at the narrative for AI and the potential it's delivering in many areas, we've got more companies today. Broadcom announced it's looking at ways to get involved in new kinds of tech chips, which it will work with TSM in Taiwan. So clearly that trend has got some way to go. We might see a bit of fluctuation in the near term. Once the dust settles, it's quite possible we get into the third quarter. That story will still be very strong, and the major tech companies that did so well in the first part of the year will come back into play again. In the meantime, yes, we may see a bit of shenanigans as people move money around. But when you look at the United States, it's still performing and the rest of the world is lagging. So why keep your money anywhere but the United States?
OK, Mark Cranfield from Bloomberg's M-Live team with the analysis there on what could be moving these markets in the hours and days ahead. Mark, thank you very much indeed. Now to the political risk. Maybe there's a bit of a lack of risk when it comes to the UK. Well, let's get that assessment from Lizzie Burden imminently. Voters in the UK then heading to the polls in 10 days' time, of course, as campaigning in the general election enters its final stretch. But the next government is set to face a worsening of the so-called misery index over the next 18 months as rising joblessness outweighs slowing inflation. Let's bring in Lizzie Burden, then, our UK correspondent, for the details on this. This is the backdrop, then, Lizzie, to the next government in terms of the economic fragility of the UK. What is the misery index?
Well, I think when I first saw it, I wondered whether it's what we should call the feeling on a Monday morning when you're trying to get out of bed, how long it takes you. The misery index was come up with in the 1970s, and it's designed to combine the impacts of inflation and unemployment. Now, interestingly, it's the unemployment side that's likely to be the pain point actually for the first 18 months of the next government, and it speaks to the economic inheritance of whoever wins. The polls suggest it's going to be the Labour Party and Sir Keir Starmer. Now, we've already had concerns like these expressed to Bloomberg. We interviewed the CEO of Currys, the high street electronics retailer, talking about how the next government really needs to think about whether there is going to be another rise in the national minimum wage, and whether that could be prohibitively expensive as a cost for employers when they're thinking about bringing people on. You've had the Bank of England's Megan Green talking about potential unemployment. So if you look at the misery index, since Rishi Sunak took office, it's actually averaged about 11. It's now at 6 because inflation's dropped the Bank of England's 2% target. But the worry here is that in the first 18 months of the next government, it could average about 7.5. So a difficult message
it's come
to handle.
down a little, but it's expected to go up again in the second half and through into next year, providing, as you say, a challenging backdrop for whoever is in charge, whoever is the Prime Minister. We have, meanwhile, in terms of that race, we have a debate later this week between the Prime Minister, Rishi Sunak, of course, and Sir Keir Starmer. What are you going to be watching for within that, and to what extent it could be a platform, a narrow one, potentially, for the Prime Minister to maybe on the edges move the dial to some extent?
Well, we say this every single time, don't we, that Rishi Sunak needs to take the opportunity to close those opinion polls, and it's just not happening at the moment. In fact, it's the polls that's leading the political narrative and the media narrative. It's got that bad. But I would draw your attention to a debate that we're having right here at Bloomberg today, all about business, and it's a real rare opportunity, actually, and I'd say it's important because in this moment in British political history, the consensus is that economic growth has to be the priority. And of course, winning business over is going to be essential to that. We're going to take questions from the 5 big British lobby groups on business, and it's an opportunity to find out the differences between the two major parties. I'd say both those figures you see on your screen right now, Kemi Badenoch and Jonathan Reynolds, are interesting in their own right. They're both born in 1980. They both became MPs relatively young. They've both had meteoric rises up the party ladders, and they're both tipped to be potential leaders. Kemi Badenoch, of course, actually ran in 2022 to be the leader. And so the questions that I want to hear the answers to in this debate, if they behave themselves and don't speak over each other, are what their pitch is to business, how you fix a skills shortage without more migration or without serious investment into education, where they stand on Brexit, which has been the elephant in the room of this campaign, what their long-term strategy is when it comes to AI, sustainability and the green economy, an industrial strategy, which is not really a very sexy term, but it's important, isn't it, to economic growth, and finally just how you reignite investment and if you're going to be picky about where that investment comes from.
Lizzie Burton, thank you very much indeed, our UK correspondent, of course, on what to watch in terms of that debate, and we will bring you that live televised debate which will be moderated by Bloomberg's Anna Edwards. They're also going to face questions from Britain's leading business groups, and some of those questions that Lizzie has posed. Viewers in the UK can catch the business debate at 12:30 p.m. on Bloomberg TV. It's also on the Terminal website, YouTube, and on Bloomberg Radio. And just before the debate, Philip Hammond, the former UK Chancellor, will join the Pulse. That interview at 9 a.m. here in London. OK, here's what else we're thinking about this week then to put on your agenda. On Thursday, we're going to get the EU Leaders Summit. Of course, the politics of Europe will be high on the agenda, but also continuing support as well. How to continue to support Ukraine as it faces a further barrage of missile attacks from Russia over the weekend. So that summit on Thursday. Meanwhile, on the same day, there is the presidential debate, the first one of this presidential cycle between President Joe Biden, former president, of course, Donald Trump. So we'll be bringing you the analysis and the build-up to that televised debate. Then on Friday, European inflation. We'll get some more granular detail from countries like Italy and Spain, as well, of course, and ahead of the PCE data out of the US. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the Terminal. Coming up, Israeli Prime Minister Benjamin Netanyahu says major operations in Gaza will end, quote, very soon. We bring you the latest. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. To the latest in the Middle East now, where the Israeli Prime Minister says the intense stage of fighting in Gaza will end, quote, very soon. Benjamin Netanyahu has told local Israeli media that the country's military will redeploy some forces to the north, where exchanges with Lebanon's Hezbollah have been escalating. The Prime Minister also directly rejected, for the first time, the prospects of a ceasefire deal with Hamas. For more, let's bring in Horizon's Middle East and Africa anchor, Jumana Pasechi, who joins us from Dubai. Jumana, good morning. Tell us more then about what we've been hearing from Netanyahu. It's the first time he's spoken to Israeli military. What has he been saying? The Israeli media, I should say. What has he been saying?
That's right, Tom. I mean, it's pretty notable in itself that this was the first sit-down interview the Prime Minister did with an Israeli channel since October 7th. So something to note there. But of course, he was asked about the direction of travel for the fighting in Gaza. And interesting that he said here that they are looking to end the intense stage of fighting in Gaza soon and will start to focus on targeted operations against Hamas. Also interesting that he directly rejected for the first time, so this is him directly saying it, that they will not agree to that proposal for a ceasefire put forward by Biden a couple of weeks ago. And remember, this entailed multi-phases, including moving from a temporary ceasefire towards a permanent ceasefire. What the Prime Minister said yesterday is that they would agree to a temporary ceasefire, that it would entail the release of some hostages, but they would not move towards that permanent ceasefire unless, and again, this is reiterating what they've been saying consistently the last few weeks, that goal of fully eliminating Hamas is complete. One other thing to note, Tom, which I think is incredibly important right now and is on many people's minds, is that he also said that moving the attention away from Gaza would mean that they would have the reserves to redeploy up in the northern border. And of course, there's a lot of focus about the hostilities that are taking place between Israel and Hezbollah. The war rhetoric has increasingly intensified the last few weeks.
And Jumana, you take us to that other angle of this story in terms of the tensions on the northern border. What is the latest in terms of the tit for tat between the two sides, and to what extent the risks have increased?
Well, daily crossfire on the border is an occurrence that we've been seeing since October 7. But as we noted last week, I think a pivotal moment came when the IDF said they were prepared or preparing themselves for the possibility of an offensive into Lebanon. That was quickly met by remarks from the Hezbollah chief Hassan Nasrallah, who threatened Israel and said that they would be willing to engage in a war with no limits and no restraints should Israel opt for a full-blown war. Now, again, also interesting to see that over the weekend, once more, we heard that sort of fighting war rhetoric from Hezbollah. But then the Prime Minister, Netanyahu, in the interview yesterday was asked about it. And he said, if we can, we will do this by diplomatic means. If not, it will be achieved in another way. And therefore, opening the door potentially to a diplomatic solution here, which I think would come as a relief to many. But of course, the other development that's taking place right now is the Defense Minister, Gallant, is in the U.S., meeting with some U.S. counterparts. And of course, they will be talking about the future of the fighting in Gaza, in addition to some form of mediation effort to bring down the rhetoric on the Lebanese border right now. But again, interesting to note that Netanyahu seems open to some form of a diplomatic solution. We'll see how the talks evolve this week.
OK, indeed. Horizon's Middle East and Africa anchor Jumana Pasechi in Dubai with the latest. Jumana, thank you. Now to some other stories making the news this Monday. Saudi authorities say more than 1,300 people have died during this year's Hajj pilgrimage as the kingdom faces extreme high temperatures. The Saudi health minister says most of the victims were what he called unauthorised pilgrims who walked long distances in the heat to perform the Hajj rituals. Almost 700 of the dead are from Egypt. Speaking on state-owned TV, the minister said another 95 people were being treated in hospitals. Coming up, China and the EU agreed to hold talks on the bloc's plan to impose heavy tariffs on electric vehicle imports. We get the update and the potential implications of those discussions. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday. China and the European Union have agreed to discuss the bloc's plans to impose additional tariffs on EV imports, taking levies to as much as 48%. Let's bring in our Global Autos editor, Craig Trudell, then, who joins us now from Oslo. Craig, why is the EU then agreeing to hold these talks with China?
I think there's real concern among some countries, particularly Germany, about blowback over these higher duties. So, there is potential for retaliatory tariffs on large engine cars that would hurt the likes of Volkswagen and Mercedes. There's also, beyond the auto industry, some potential here for, retaliation, be it on French wine or brandy or Spanish pork or dairy. These are all things that have been sort of floated in the wake of the EU announcing just in the last few weeks that tariffs would be put on Chinese electric vehicles as high as 48% in the case of SAIC, the maker of MG. So we're talking about pretty significant increases in tariffs. Companies would not universally be held to that higher duty, but at the high end, this is a very significant attempt on the part of Brussels to really sort of rein in the amount of electric vehicles coming in from China and put on the part of Europe, put their companies on a more level playing field.
Craig, what would you expect the message will be to their Chinese counterparts from Europe when they enter these negotiations, particularly around the nature of these tariffs and whether or not they can be differentiated from the kind of tariffs being imposed by the US? Is the EU going into this saying we are aligning with the US, or are they trying to differentiate the two?
There's a real effort to differentiate here. And, Germany's Vice Chancellor, Robert Habeck, actually paid a visit to Beijing this past weekend. He reiterated Europe's willingness to talk. I think there is real concern, in Berlin about this in particular. I mentioned, large engine cars and the fact that, VW and Mercedes and BMW are very concerned about these tariffs. In contrast to the tariffs being imposed by the U.S., Habeck talked about this idea that these are not, blanket punitive tariffs, but these are differentiated. They're compensatory. They've been, pulled together over the course of 9 months, and as a result of an investigation, a quote from him this weekend was, "This is not punishment. It's a compensation for the advantages granted." And we do know that, over decades, quite a bit of support was arranged for this industry because China really saw potential for sort of stealing a march on the rest of the world in electric vehicles.
OK, our Global Autos editor, Craig Trudell, thank you very much indeed on the implications of these discussions between Europe and China on these potential EV tariffs. And we'll see how those discussions unfold and what to watch for, of course, implications for that industry. Craig, thank you. Coming up, investors are on edge, of course, over the French elections. We know that, and the volatility could remain this week. We're going to take a look at how traders then are navigating the political risks out of France. That is next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asian stocks trade lower as investors gear up for a week of political risks and inflation data. Japan's top FX official says authorities there are ready to support the yen 24 hours a day. Israeli Prime Minister Benjamin Netanyahu says the current phase of fighting in Gaza will end, quote, very soon, freeing up troops to send to the northern border to confront Hezbollah. Plus, with 10 days to go until the UK general election, Business Secretary Kemi Badenoch and Shadow Business Secretary Jonathan Redowes go head-to-head in our live debates. Let's check in on the markets then. Yes, it's been a bit of a challenge session over in Asia. The focus, of course, on the Japanese yen. Officials again warning, using jawboning to warn again around potential further intervention. The last time they intervened, expected to have intervened, was in April when the line was 160.17. That was what was crossed. And that's what triggered that supposed and expected intervention back in April. They're warning that they may step in again. We also look, of course, at the European futures after a week in which they managed to grind out gains despite the political risk in France. You have elections, though, the first round in France taking place this coming weekend. So the political risk of France remains in focus for us. European futures pointing lower by 0.1%. The FTSE 100, a bit of a drag coming through from the commodities space. Oil and iron ore under pressure. Currently, the FTSE 100 pointing lower by 0.2%. S&P futures currently flat, as are the Nasdaq futures. Let's flip the board and look cross-asset then. Euro-dollar in focus. We're going to get inflation data out of Italy, Spain and France later this week before we get the PCE, the key data for the Fed, on Friday. So inflation as a story remains central this week. Euro-dollar currently at 106, just shy of that 107 level. US 10-year at 424. Not a lot of movement on the benchmark in the session so far. $85 a barrel on Brent, currently flat. 103 on iron ore, a hit of almost 2%. Renewed concerns about demand out of China. To France now, investors there, of course, on edge over the prospect of a change in the balance of power in that nation. Banks, highway operators and utilities have been at the forefront of a $240 billion sell-off on the Paris bourse. I'm joined now by Julien Pontus, the Bloomberg France equity markets reporter, joining us out of Paris. Julien, good morning. Thanks for joining us. What is at stake then for investors?
What investors are trying to do now is they're trying to price 50 shades of different market stress. There's a lot of possibilities, a lot of uncertainty, and none of the options, none of the scenarios are particularly good. So you get different types of investors, those who need to be invested in France. So these people are trying to cherry pick through their way through the dip, trying to find the safest possible stocks. Other international investors are just getting out of France, and it's a very, very difficult it's a very difficult moment for stock investors.
And you talk about how investors are adjusting to this new political uncertainty in France. Give us a little bit more detail. You have seen those outflows then in terms of international foreign investors in the French equity space. What else have you been seeing, Julien?
So basically, one clear trade is to cut French banks. So a lot of French investors are cutting because you have a direct link with French sovereign debt. So that's an easy trade to do, basically, if you want to cut out risk. You've got highway operators. There's a risk of nationalization. The far right has also been talking about privatizing the French equivalent of the BBC. So that means that for French medias, they would have to compete on a smaller pool of revenues, of commercial revenues. There are a lot of different on utilities. There's been a lot of very distinct ways of cutting risk on France. There's also no one has been buying the dip. In the French stock market basically is broadly flat on the year, when the DAX, for instance, is up 8%. And so then you have the option to cherry pick your way and find really stocks that are the most resilient. So what people are doing, for instance, is targeting French industrials that have a very large footprint outside of France, where French revenues is only 5 or 10%. Companies that are active in Asia, in the US, and different ways. So there are different ways of adjusting to the risk, but there's no really good outcome to be expected. When we will be on July 8th on the Monday following the elections, there's no there's not a great scenario out there.
Yeah. Julien, then in terms of, so we have the first round. It's 2 rounds. We had the first round this weekend, then the final on July the 7th. Talk to us about what is expected then between now and that second round of voting in France.
There was a note by strategists at Odo that I found real good. Basically, they were saying, get out, stay out, don't get in. There's going to be a lot of uncertainty between now and the end. There's a lot of volatility expected. And again, there's no really positive scenario, whereby you would invest on, the French stock market really. So I think there's going to be a lot of stress, a lot of volatility, a lot of uncertainty. I think it's a market that's really complicated. Some people who need to be invested in French equities, for instance, fund managers who have, funds exposed to France specifically, they need to find their way. But if you don't need to be in this market, a lot of, strategists or brokers are saying, you don't want to be in this market for the next 2 weeks.
Okay, Julien Pontus, I have a sneaking suspicion you're going to be very busy, you and the team, over in Paris as you continue to monitor the fallout for the equity markets of France, of course. The volatility, the uncertainty, Bloomberg's French equity markets reporter in Paris on what to watch for and how investors are readjusting, of course, to the new political landscape in France. Talking of which, some poll numbers crossing just in the last few minutes. An IFOP poll pointing to a point in terms of percentage in terms of what is coming through from these polling companies for the left-wing alliance of 29% over in France. So France's left-wing alliance gaining and getting 29% according to the IFOP poll. Meanwhile, Le Pen's National Rally Party has 35.5%. Macron's group, including Renaissance, of course, has 21%. So still leading is Le Pen's National Rally Party with 35.5%. According to this poll, of course, the IFOP poll, followed by France's left-wing alliance at 29% and still in third place, Macron's grouping with just 21%. We will keep across this story for you, of course, over the next few days and as we lead up to that first round vote over the weekend. Now, Russia's authorities say 4 people have been killed and more than 150 injured after what it claims to be a Ukrainian missile attack on the occupied Crimean Peninsula. 4 missiles were taken down by Russian air defences, with a fifth hit and diverted before exploding over Sevastopol. The incident came hours after Ukraine said it shot down 2 Russian missiles. Coming up, an exclusive interview with AI data scale-up Prolific. The CEO and co-founder will be speaking to me on the challenges facing the sector and the opportunities. Stay with us. This is Bloomberg.
I really get excited about, because I'm a labor economist by training, and I think a lot about the distribution of opportunities across the nation and the world. And I think of AI as potentially being a great leveling the playing field, democratizing the expertise by giving people a hand up or a leg up in terms of starting.
San Francisco's Fed's Mary Daly there on AI creating opportunities in the labour market. Talking of which, here in the UK, employers are offering a 14% wage premium for jobs that require skills in artificial intelligence as the sector's boom reshapes the labour market. London scale-up, meanwhile, Prolific is one of the companies helping meet the demand for humans giving feedback to AI systems. Really important as these foundation models try to build out quality in terms of the models that they're putting out onto the market. Let's speak exclusively now to Prolific's CEO and co-founder, Phelim Bradley. Phelim, thanks for joining us in the studio. Prolific started with a business proposal that was connecting participants to researchers. You were the middlemen, essentially, to participants, quality participants for researchers at universities and academics around the world. Now you're adding on this AI part of the business. What is the potential market value of that? You already have customers, including the likes of Stanford and Google. what is the potential market upside for your business from this addition?
Yeah, so firstly, that's absolutely right that we've expanded from this core offering of providing researchers access to high-quality, diverse, representative participants. And there's a lot of overlap between that need in academic research, behavioral research, market research, but now also in AI. So the markets for this market size in AI, which is typically called reinforcement learning through human feedback, is estimated to be up to $17 billion in 2030. We're seeing astronomical growth in this sector of the business, particularly from big tech startups in the US, but also here in the UK and Europe.
Yeah, that acronym, RLHF, isn't it, in terms of reinforcement learning through human feedback. So that's really important, these models. And they're under pressure, the companies like OpenAI and Meta and Google and others, to ensure that they do have good quality data underpinning their models. And then they need the humans to interact with those models and test them and stress test them. And that's where you come in. Talk to us about the data component then. Is there a provision of data as well that you're able to work with these models on? And do you have a concern about the quality of data? Where are we in terms of the gap that needs to be closed between the kind of quality data that you're able to provide and the data that the current models are built on?
Yeah. So there's obviously three core components to building AI. It's the algorithm, the compute, and the data. And that data fundamentally comes from human beings. So artificial intelligence isn't so artificial. It's based on data that comes from us. I think ultimately, these AI models are extremely good at reflecting an approximation of the data that it's built on. And we want these models to reflect the best of humanity, so the best of our values, the best of our skill sets. And so we're building Prolific to be a platform where these AI researchers researchers and builders can access the breadth of humanity. I think in particular, some problems that we're addressing is the diversity of people who are training these models. So increasingly, the audience who is labeling your data, who is providing feedback to your model, is increasingly important. And this is coming.
Well, Google had a big misstep there, didn't they, with their model that came out and had a diversity component that led to a lot of controversy in terms of how they were depicting people from historical scenarios and different ethnicities, and that caused a lot of controversy for Google.
Yeah, absolutely right. And I think so. One of the other places that Prolific is playing a role is not only providing this feedback data to fine-tune and train these models, but also to stress test these models, commonly called red teaming, where you get a group of people, either experts or from a crowd, to stress test and push these models to the limit before they are pushed out into production as part of a responsible deployment process.
You recently raised about $32 million US, and part of that was for expansion into the US. Talk to us about how that expansion plan is going and the market opportunity in the United States.
Yes, so we've recently opened an office in New York, started hiring boots on the ground. We've been working, obviously, with our US companies for a long time now, Google and Stanford, as you mentioned. And it's important to note that the US is currently leading in the AI space. So in the AI Stanford index report that recently came out, 61 of the approximately 100 notable AI models came from the US. The UK, in comparison, is lagging slightly behind with 4 models, all coming from Google DeepMind exclusively.
When we think about the politics of the UK, the election coming up, whoever takes over from July the 5th, what would your message be to the new incoming government of the UK in terms of top 1, 2, 3 priorities to help bolster your sector?
It's a great question. I would say, so whoever ends up in power, they've stressed the importance of growth and the importance of tech scale-ups in that growth. For me personally, I think the ease of spinning out startups from universities, so turning the world-class research that happens in UK universities into spin-outs.
Which they do very effectively in the US, but less so here.
That's correct, yeah. UK founders within universities get a raw deal compared with their US counterparts. So where US universities take between 2 and 3% of the equity of spin-outs, UK universities in comparison take between 15 and 20%.
Wow.
So, and the process also takes a long time. So typically 10 months to a year to successfully spin out. I think reducing that time and giving these startups a fair deal and access to capital, in particular these larger rounds that are required for building AI models. We've recently seen Mistral in France raise over 500 million euro. These are the kind of sums that are required to build these foundational AI models, and I'd love to see that replicated in the UK.
Okay, well, on the funding question, before we let you go, are you fundraising this year? Are you still profitable? You were profitable a few years ago. Do you remain profitable? Are you looking to raise additional funding this year? And as an add-on, would you list in the UK?
So we are. We've always been a capital-efficient business. Obviously, we raised last year, so we're investing that capital into growth, in particular in the AI market, building out our platform and our crowd for those use cases. So we're not currently fundraising. We don't need the capital, although we may optionally fundraise towards the end of this year or next year if we feel like there is a opportunity to really accelerate this growth. We're quite a long way from listing. I'm focused on building the best company I can and serving our customers well. Many options will be on the table at that point, and hopefully the London stock market is an appealing offer at that stage.
Okay, all right. So London has not been ruled out. Just looping back to one of the points you made earlier, which is that there is this demand now for the foundation models to have this human component to stress test their models, and we're in this multi-domain environment now where essentially they're building out models that can focus on particular sectors, particular jobs, whether that's insurance or finance or different layers within the financial sector, different layers within insurance and accounting. Talk to us about the demand then for what you do within that multi-domain model, and where are we in how that story is evolving?
Yeah. So as I mentioned earlier, I think the trend is absolutely going from data labeling that requires any human beings to an increasing reliance on experts in a particular field. So moving from general data labeling to a world where who is labeling your data and providing that feedback to the models is increasingly important. And as a result, that's the direction our strategy is taking as well, giving these AI researchers access to verified experts alongside this diverse and representative crowd.
Okay, Phelim, thank you very much indeed. Really interesting. Continue to monitor the progress of your company as well. Thanks for coming into the studio this Monday morning, bright and early. Phelim Bradley, prolific CEO and co-founder. Now to some other stories making the news this Monday. Apple is to withhold a range of new technologies from hundreds of millions of consumers in the European Union. The company announced on Friday it will block the release of Apple Intelligence, iPhone mirroring and SharePlay screen sharing from users in the EU when the services are released later this year. It says the bloc's regulatory attempts to rein in big tech force it to downgrade security and place user privacy and data at risk. US prosecutors are reported to have recommended to senior Justice Department officials that Boeing face criminal charges for violating a settlement related to 2 fatal crashes. According to Reuters, the charges could extend beyond the original 2021 fraud conspiracy charge relating to 737 MAX crashes in 2018 and 19. There is plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's check in on some lines crossing now on the earnings front, this time from Naspers, the parent company of Prosus, also with a 25% stake in the gaming company that is Tencent over in China. Naspers' full-year consolidated revenue coming in below the estimates, $6.43 billion, below the estimates of $6.51 billion. Naspers say it will continue to explore new investment horizons. Full-year operating loss coming in at $562 million. US dollars. In terms of the core headline earnings per share, also a bit softer than the estimates. 11.48 US dollars versus just over 12 US dollars had been the estimates. Within Prosus, and breaking out the detail there, Prosus is consolidated e-commerce, posting a consolidated e-commerce trading profit for the first time of 38 million US dollars for the full year of 2024. So Prosus pushing its e-commerce business into its first ever profit. There's a focus, of course, we know that, on the buyback story for Naspers, and they are coming through the line. Buybacks to continue as long as the discount is elevated. So that's a bit of detail on the buyback story for Naspers as they come through with those earnings. Let's check in on some terminals that jumped to my attention as we look ahead in the US to the details around the inflation story with the Personal Consumption Expenditures Index, the PC Index, a key gauge, of course, for the Fed, dropping on Friday, and question marks about where the neutral rate is for this Federal Reserve. Is it going to be higher than recent history has suggested? Certainly, if you look at forward contracts referencing 5-year interest rates in the next 5 years, that has stalled at 3.6%, well above the Fed's own estimate of 2.75%. So the neutral rate, or R star, for the Federal Reserve, and whether or not, even if they cut rates, when they cut rates, to what extent they will go lower in an environment where maybe the new R star is higher than historical levels. Meanwhile, and that ties in terms of the liquidity story, in terms of the rate story, to what's happening with Nvidia. In fact, what is the key driver of these markets? Is it the AI revolution, or is it indeed the Fed? What is more important for these markets? Nvidia, certainly, in terms of the complexity of getting a gauge on sales and revenues, is just jumping out to us. We have a deep dive piece on this on the terminal. Nvidia shares trading roughly 23 times projected sales over the next 12 months. That's the most expensive stock on the S&P 500. The problem is a challenge for analysts, but also the company itself, to get a figure on what revenues are actually going to be. They have exceeded revenues, the midpoint of the company's own forecast, by an average of 13% since 2023. Briefly, on the volatility in French stocks, that premium in terms of the volatility and the spread over the DAX between the CAC is at elevated levels. And we build up, of course, to the first round of voting this weekend. But before that, we're going to get to the UK politics, because later today, UK Business Secretary Kemi Badenoch and Shadow Business Secretary Jonathan Reynolds will go head-to-head in a live televised debate here at Bloomberg's headquarters in Europe, moderated by Bloomberg's Anna Edwards. We're going to get more on that, of course, bringing that live. Next up, though, it is Markets Today. This is Bloomberg.